Well, hello and welcome to Business Morning this morning on Channels Television. Well, we have Eid and Children's Day celebrations today, but financial markets, banks are closed, but after the holidays, investors will hit the markets again. So let's prepare you for that and other investments here. Here are the top stories this morning. We're still tracking oil. We're seeing oil prices ease from recent highs today, erasing some of the previous day's 4% gain as traders, they're seeking clarity on negotiations between Iran and the U.S. after renewed hostilities. That set back efforts to reopen the Strait of Hormuz. And, definitely we're seeing Brent down about $1.52 this morning, dropping below the $100 mark again, 2.33%. We've seen a lot of volatility around that $100 mark. That's for Brent crude. WTI, $91.16 per barrel, 2.97% lower. We did see oil surge on Tuesday after U.S. military carried out, new strikes in Iran, hurting hopes over the weekend that the United States and Iran would reach an agreement, to end the war. So investors are still watching that closely, and we're still seeing that volatility in the oil market. We'll see if it continues to the end of the week, but it's looking like it's a mixed trading week. That's for oil this week. Let's get a check on how your money performed yesterday. Yes, it was a trading day yesterday, even though the markets are closed today. And yeah, I did close lower, losing that 250K psychological level now, and down about 55 basis points, 249,738. That's for the all-share index, still at all-time highs, but below that level, 888.61 billion. That was what was lost yesterday from the market capitalization. Losses in major counters, including GTCO, Dangote Sugar, First Holdco, that weighed heavily on performance. While trading activity, we see that slowed. Volume value lower compared to the previous day, but we see for deals traded, 65,000 that was traded, much higher than the previous trading day. If we look at other parts of the market now, top trades, Access Corp, financial services, all through. Zenith Bank, 33.83 million traded. And we see M-Benefit, that's for the insurance counter, 31.8 million. That was traded yesterday. So when the markets open, I believe Friday, we'll see if we can get the bulls back. All right, let's look at investments now. We've seen investments rise about 3% in April. Domestic and foreign investor participation on the Nigerian exchange continued to strengthen in April, with total portfolio transactions rising by 3.35% to 1.8 trillion naira. And that's according to latest NGX data, showing domestic investors remain the dominant force in the market, accounting for more than 86% of total activity, even as foreign participation moderated from March levels. So there you have it. Domestic investors dominating again, 86.12% of total trading activity here. Nigerians trading that, 0.81% increase from March. Domestic investors remain the backbone of the Nigerian equities market. If we flip over to other parts of that data now, let's see what foreign investors, what they're doing, what they did. So yeah, 250 billion. That was foreign portfolio transactions. That's for that month. Foreign participation accounted for 13.88% of the total market turnover, but we're seeing that transaction declined to about 10.89% from March levels. So that's the recent data for April, showing that foreign investor participation in the stock market, that declined about 10%. What is that telling us? Is it the sell in May and go away impact? That's what affected that's April trading for foreign investors. And we like to see foreign investors in the market, but we also like to see domestic investors dominate too. Total transactions on the exchange, 3.35% higher for April. And we see the turnover, 1.8 trillion. That's a lot of activity right there on the NGX. Transactions, 1.74 trillion. That was for March 2026. So we see the rise there. So definitely we'll keep tracking to see how the NGX is doing when it comes to transactions right there. All right, let's look at other stories now. We'll look at earnings. We still have some companies releasing the Q1 earnings, and the latest one, that's from Fidelity Bank. Yeah, we did see Fidelity Bank. They recorded about 92.4 billion Q1 2026 profits, and we see the was quite strong there for Q1. Yeah, pre-tax profit 92.4 billion versus 105.7 billion. Post-tax profit, that was about 74.4 billion compared to 91.1 billion naira. Then, guess we've messed that up, but definitely we're still seeing some of these earnings come out. Definitely for the latest one, gross earnings 434.9 billion, up about 37.89%. Year-on-year. Interest income 314.4 billion, up 22.79%. So that's Q1 earnings right there for Fidelity Bank. We did get their full year before now, and definitely we're seeing increase there when it comes to some of these strong earnings. All right, to other company news now. Shareholders of Stanbic IBTC Holdings PLC, they've approved all resolutions presented at its 14th annual general meeting held in Lagos, with the group reaffirming its commitments to sustained growth, digital innovation, and market value. The meeting brought together the Holdco's board of directors, shareholders, and regulators to review the group's 2025 financial performance and strategic outlook for the year ahead. Take a listen.
Packed house here at the Jasmine Hall, Eco Hotel and Suites in Victoria Island, Lagos. As shareholders, institutional investors, and regulatory observers gather for the 14th annual general meeting of leading financial powerhouse Stanbic IBTC Holdings PLC. Top on the agenda, navigating a highly dynamic monetary policy environment and reviewing the group's performance across its banking, wealth management, and pension businesses.
Lead the organization through a period of regulatory reform, capital strengthening, and sustainable growth.
The board notes that despite economic headwinds, the group delivered strong earnings performance driven by growth in non-interest revenue, increased transaction volumes, and prudent risk management. At the meeting, retiring directors, including Mrs. Shola David Borha, Mr. Balama Manu, and Mr. Kunle Adedeji, were re-elected, while shareholders also considered the appointment of Mr. Chuma Nwokocha to the board.
Relating to the director's remuneration has been concluded.
Management says the group remained focused on digital innovation, customer service delivery, and long-term value creation across its banking, pension, investment, and asset management businesses.
We have provided 277 billion naira in sustainable financing. Of this sum, 95 billion was in green financing.
First, we want to thank our shareholders who turned up today and who have supported us through the last capital raise and been supportive of the business through the years. They were obviously pleased with the set of results that were presented today, and they were quite welcoming and supportive. We've taken note of their guidance as usual, but I think the dividends we have proposed is quite welcome, and we have committed to a certain amount dividend payout ratio.
With its 14th AGM concluded, Stanbic IBTC Holdings is signaling to the market that it has the capital buffers and the institutional agility to navigate a tightening monetary environment.
All right, so our first conversation now, we're doing a throwback. Now we see the Central Bank of Nigeria, they retained their monetary policy rate at 26.5% following the 305th meeting of the Monetary Policy Committee, maintaining its tight monetary stance amid persistent inflationary pressures, exchange rate concerns, and global economic uncertainty. The Apex Bank also retained other key parameters, including the cash reserve ratio, liquidity ratio, signaling a continued focus on price stability and macroeconomic confidence. Also, we're getting recent commentary from the CBN governor. He warns against returning to CBN intervention programs, says they weakened monetary policy. Well, joining us to unpack this is Dr. Victor Obo, who's the Director, Monetary Policy Department at the Central Bank of Nigeria. Great to have you on the show, sir, and happy holidays.
Good morning, Ladi, and happy Salah to our Muslim brothers and sisters. Happy Children's Day to our children.
Yeah, it's a double celebration today at this point. But definitely we still have a lot to unpack, when it comes to the latest MPC decision. But we're getting a commentary from the CBN governor. He's saying previous intervention programs, they distorted the Apex Bank's balance sheet, weakened monetary policy transmission. From a policy standpoint, what specifically made those interventions ineffective, and what lessons has the MPC drawn, from that period?
Thank you very much, Ladi. You were aware that for some times in the past, for a prolonged period of time, there were various types of development financing intervention embarked upon by the Central Bank of Nigeria. Those interventions in themselves are unconventional. And as the name goes, there are interventions that should happen at extreme cases, in extreme circumstances, peculiar circumstances, when you have serious shocks. And those interventions are supposed to cease or be withdrawn after that. Unfortunately, we had a prolonged, lingering period of continuation of those interventions. What that did was to, raise the liquidity, the quantum of liquidity in the banking system. And actually, for the Central Bank of Nigeria and Central Bank all over the world, these are unconventional interventions. Sometimes, if you are not able to withdraw those interventions out of the system, then you have a problem because they now fuel inflationary pressure. And that is what studies have shown in the case of Nigeria. So what the governor essentially was saying is that right now the economy is grappling with a state of excess liquidity. And that has shown in many ways. And that is what the central bank is doing. So you see a lot of mop-up going on in the system to ensure that those liquidity do not flare up inflationary pressure. So what he's saying is that the fiscal authorities are better placed to carry out those interventions so that the responsibilities are clearly stated and partitioned between the monetary authority and the fiscal authority. So that is exactly what the governor is saying. Thank you.
Talking about mopping up at this point, we did get latest money supply data shows that money supply increased to 124.99 trillion naira. That's the latest one. And I'm wondering, despite all of the mopping up activities, we're still seeing money supply rising. Is there something else injecting so much money into the system, even though there's a lot of mopping up going on?
Thank you. The conventional sources of liquidity into the systems are very clear through revenue from government, which is through FAC and is shared among the three tiers of government. You also have the foreign side of it in terms of FX flows that comes in through the oil receipts and the rest of them. But I would like to let us know that what you are saying as increase in broad money or money supply is the nominal growth, is the nominal increase in money supply. But in terms of growth year to date, which we monitor against our benchmark, we are in a good position. There is no, anything to worry about in terms of growth of money supply because of the existence of potent tools that we use to mop up the liquidity, especially the open market operations, which the bank conduct from time to time. The quantum of money, is quite okay. except for the fact that the cost of liquidity management is high. That's all.
All right. So looking at inflation, there's also the CBN now emphasizing orthodox monetary policy tools and a transition towards an inflation targeting framework. In practical terms, how would this approach improve inflation control, exchange rate stability, and investor confidence? You know, we did the last data there, 15.69%. That was the latest inflation data for April, also showing that rural inflation, that's rising even more than urban.
Thank you very much. The primary mandate of monetary policy or monetary authority is to ensure that we achieve low and stable inflation, which is a win-win for both the household and the firm and even the economy. Now, we have conventional tools that we use, and as I have mentioned before, those tools have proven over time, and in line with global best practices, those tools are effective in bringing inflation down, especially when it is demand-driven. So that is what has happened. And Ladi, you will agree with me that since this management came to take over, you will discover that they have returned to orthodox monetary policy, which means that they are using conventional tools that are known across the globe. That has helped to bring down inflation. Remember, we were around 34% in November 2024. It is the use of those conventional monetary policy tools that have helped to bring down inflation to where we are today. Now, the management is trying to consolidate this achievement by transiting to inflation targeting. What that means is that we are currently employing or adopting or operating monetary targeting, which focuses on monetary aggregates. But when we shift our focus to inflation targeting, we will now set up a target, which we will now pursue to ensure that we achieve that target. And it will be more transparent, it will be more focused, and everything we'll be doing will be to ensure that inflation is brought down to a level that is conducive for growth, both that of the business and the economy as a whole. So that is the target of monetary policy. And a lot of effort has gone into that transition. And that has helped us to ensure that the focus is on monetary policy.
So, definitely, seeing that rural inflation is rising faster than urban inflation, what is that telling us, really? And is the MPC worried about this trend?
Yes, the MPC is concerned about the disparity between rural and urban inflation, but what that suggests is that there are some structural rigidities which are most common in rural areas. You talk about infrastructure, you talk about insecurity, you talk about other structural factors that inhibit, free movement of goods and services in rural areas. So all this could be responsible for the increase in rural inflation when you compare it with urban inflation.
All right, let's look at interventions now. Some critics argue that intervention programs help support, critical sectors like agriculture, manufacturing, SMEs during periods of economic stress. And there is a lot of stress right now. How does the CBN plan to balance, macroeconomic stability with the need to also stimulate growth and support, productive of sectors? Or do we just do away with interventions, really?
Right. So what the CBN and the governor has said very clearly is that those interventions are actually the responsibility of the fiscal authorities. You talk about agricultural intervention, for instance. We have a full-fledged Federal Ministry of Agriculture and Food Security. You talk about industries, you have trade and investment, and I'm sure those fiscal authorities are doing a lot in that dimension. What the central bank is doing is to ensure that the environment is conducive. If you have a conducive business environment in terms of investor confidence, in terms of low and stable prices, and ensuring that investment can flow into the country, that will be able to support the efforts of the fiscal authority. There are development bank institutions like the Bank of Industry, which the central bank still continue to support. We have the Bank of Agriculture and other development financing institutions. And we believe that those institutions, you should be able to work together with the Central Bank of Nigeria and the relevant fiscal authorities to be able to provide targeted intervention to those areas that need those interventions. Apart from that, the Central Bank of Nigeria continue to provide advisory support services, technical services to government and other parastatals in a way that we will be able to work together and support growth in an optimal and conducive and cohesive manner.
All right, Dr. Obo, so before I let you go now, what are we expecting for interest rates and inflation for the rest of the year?
Thank you. Our expectation based on analysis is that this shock from the Middle East is largely temporal. It's a temporal setback to our path to disinflation. And what the forecast is telling us is that in no longer time, we will return to our path of disinflation. And towards the end of the year, definitely we will be closer to the target that we have, which is moving towards single-digit inflation.
Yeah, and we consumers are hoping fuel prices drop below 1,000 very soon, because we're really tight right now. Thank you so much. Dr. Victor Obo is the Director, Monetary Policy Department, Central Bank of Nigeria. Thank you so much, sir. And happy holidays.
Thank you, lady. It's my pleasure. Thank you, and same to you. Yeah.
Well, I'll take a break now. When we come back, we look at Nigeria's oil and gas sector. That's in a moment. Just stay with us. All right, see, Nigeria's oil and gas sector is increasingly shifting attention from just production numbers to the infrastructure that keeps the industry running efficiently. Pipelines, once viewed simply as transportation channels for crude oil, are now emerging as strategic economic assets with major implications for national revenue, exports, investor confidence, and long-term growth as debates continue around ownership, valuation, and governance of critical infrastructure. Like the Amukwe-Escravos pipeline, industry stakeholders are raising broader questions about how Nigeria manages high-performing energy assets, with pipeline uptime directly affecting crude evacuation, export capacity, operational productivity, and even government earnings. Experts say the future competitiveness of Nigeria's energy industry may depend as much on logistics infrastructure as on oil reserves themselves. Joining me now to discuss this, we have Mr. Mujid Dahiru, Executive Director, Plantrix Energy Limited. Great to have you on the show, sir. Good morning.
Good morning. Thanks for having me.
Yeah, so looking at key pipelines in Nigeria, we have the Trans-Niger Pipeline, Escravos Lagos Pipeline System, OB3 gas pipeline, AKK pipeline, a lot of pipelines, running across the country. Why do you think these pipelines are no longer seen as just oil transportation systems?
That's because the pipeline network in Nigeria is like the artery of the oil and gas industry. Because from production to processing to evacuation and to export, you need this network of pipelines to process oil and gas products for export, which is the mainstay of the Nigerian economy, the backbone of our economy, and the major earner of foreign exchange for Nigeria. Nigeria is a major oil and gas producing country and ranks very high in the world. And so it is in line with international best practices to make sure that you have high quality, highly efficient infrastructural and logistical network of pipelines. Otherwise, you will begin to have underutilization of your rich endowment of hydrocarbons, because without these pipelines, which serves as the artery, so to say, of the oil and gas industry, you will not be able to optimize production and earn as much foreign exchange as supposed to be able to earn from the potentials you're endowed with as a country.
So looking at the industry in total now, I guess pipelines are very important for overall productivity of Nigeria's oil and gas sector, right?
Extremely important. And we need to replenish the old stock of our pipelines, expand into new avenues, because we're having new oil fields coming up, so as to ensure steady production, processing, and export of oil and gas products and services to this country to earn us foreign exchange that we need most urgently at this point in time.
Okay, so paint a picture for us now. What exactly is the state of our major pipelines right now?
Okay, some are actually outdated and are in need of urgent replacement, while some private investments in collaboration with the federal government have been able to develop new pipelines that are actually up to date, very sophisticated, and quite efficient. For example, the Emukwe Escravos pipeline network is one of such developments that we need to expand and improve on. For example, it's a 67-kilometer by length pipeline, and it is 20 inches in diameter. And unlike the older network of pipelines, this one was buried deep into the ground to prevent vandalism. And so it is now serving as an alternative to the Trans-Forcados pipeline in the western corner of the Niger Delta region. So we need to have more of these newer sets of pipeline networks that can actually replace the older ones, because Nigeria is still a heavily dependent on oil and gas economy. And so we cannot afford to actually ease investment. We need to increase investment in our network of pipelines. Like you rightly pointed out earlier in the conversation, the AK pipeline that is linking the north and the south is reaching almost finishing point now. And so we need to sustain these investments and make sure that we boost investor confidence in order to attract more investment even into this expansion of pipeline networks.
Technically, looking at some of the losses, when you value revenue loss from pipeline shutdowns, recent estimate was about $5.45 billion. That's estimated revenue loss from Trans-Niger pipeline, shutdown. Definitely, that's a lot of money, and this is a time where government is, looking for revenue. They need revenue. They have a lot to do right now when it comes to spending on infrastructure and trying to lift people out of poverty. But do you think this government is serious, when it comes to making sure that this resource that we heavily depend on, some of these pipelines are well maintained and actually put in a condition that can actually get more revenue where we're not having losses?
No, I think so far so good. The current administration, headed by President Ahmed Bola Tinubu, working with the ministers of petroleum oil, ministers of petroleum gas, as one government, as well as the NNPC and heads of other relevant agencies in the oil and gas industry, and working in synergy to clear up all the hurdles that have militated against the much-needed investments that we've not seen flow into Nigeria in the last 12 years. And so far, that has yielded a lot of positive results. As we speak, for the first time in a long time, we are beginning to see inflow of investments to the tune of about $50 billion into the oil and gas industry. And this is because when it comes to the oil and gas industry management, the president is actually hands-on. You can give that to him. He has a background in the oil and gas industry, and because of that, because of his business orientation too, and because of the competent ministers he's engaged in the ministry, he's able to sit down and strike deals with potential investors, clearing all administrative and even legal hurdles that have, formed stumbling blocks in the way of investment. He's done that. You've seen how he has resolved the OPL 245 saga to the satisfaction of all parties. You've also seen how, for instance, the Nigerian government has been able to bring together other African countries to form the Energy Bank that is heavily supported by the Afrexim Bank with headquarters in Nigeria. That bank will be opening shop very soon, and that is to provide investment support for local efforts at developing our oil and gas industry. So I think so far so good. In the post-PIA era, the current administration has been able to manage and transit Nigeria from a government-dominated and government-controlled oil and gas industry to one that is truly deregulated around critical and tangible legal frameworks. And we're beginning to see the result in terms of investment flow and the boost in investor confidence in the oil and gas industry.
You generally see sale of, strategic pipelines like the Trans-Niger, pipeline, one of the country's biggest oil pipelines in the Niger Delta. How do you see that sale?
I'm sure you're talking about the That's the TMP. Are you talking about the Trans-Niger, the PMP?
Yes.
No, what stakeholders are actually concerned about is proper valuation of whatever assets that you are disposing of. Proper valuation. Because these assets are funded by a combination of public funds and a consortium of financial institutions, both local and abroad. And so, if you must dispose of any asset at all, you must make sure that these assets are optimally valued so that you do not put lenders into financial crisis because of low returns on their investments for these assets. That is what critical stakeholders are actually asking for. Nothing more than that. They want transparency, they want efficiency, and they want a situation where proper valuation is made on these assets so that Nigeria does not incur losses. The lenders also do not incur losses. And that also do not dampen the morale, the mood, the enthusiasm of foreign investors who are sure that when they invest and they want to divest, they'll get full value for their investments.
All right, and when we talk about transparency, when it comes to these kind of sales, is it basically just about the value, put on the asset?
It's mostly about the value that is in quotation in this instance. Because people are saying, look, the earlier valuation of these assets falls short of what independent valuers have come up with recently. And it's a genuine concern that must be looked into. There's no need to rush through any transaction that do not yield optimal benefit to all parties concerned. And so that is the concern of major stakeholders to say, look, we need to do a proper valuation of these assets and make sure that they are disposed of at the current rate that the market dictates and not an old rate that is clearly obsolete and outdated.
All right, so do you think buyers, when this kind of critical infrastructure is sold, do you think buyers of, such assets, do you think they need to be checked to see if they can actually handle, these kind of assets?
It's part of the due diligence that must go with the procurement. That is an integral part of the due process that must go along with the procurement process of these assets. We will need to see a record of past performance by the intending entities that want to acquire these assets. We want to see evidence of financial capability. We want to see evidence of having run similar enterprise before. I mean, it's all part of the due diligence that goes with the procurement of any asset, either in the private or in the public sector. And so that itself is as important as proper valuation for these assets.
Okay. All right, thank you so much. That was great having this conversation with you on this holiday. Mr. Benjamin, Mr. Mojid Dahiru, Executive Director, Plentrix Energy Limited. Thank you so much, sir, and please enjoy the rest of the holiday today.
Thank you very much.
All right, I'll take a break now. When we come back, we'll look at financial technology. That's in a moment. Do stay with us. Well, across Africa, millions of people remain outside the formal financial system, despite rapid growth of mobile phones, digital banking, fintech platforms, and payment technologies. While access to financial services have improved significantly over the last decade, according to data, major gaps still exist, particularly among rural communities, women, small businesses, and low-income populations. Well, looking at recent key financial inclusion data for Africa, we see about 2 trillion. That's the mobile money transactions globally. They crossed $2 trillion in 2025. Majority, we see Africa accounts for the majority of global mobile money transaction volume. 2.3 billion people registered mobile money accounts. That reached about 2.3 billion globally, and we see monthly active users exceeded about 500 million. All right, let's bring in Mr. Benjamin Uyimola. He's the CEO, Platnova Technologies Limited, joining me right here in the studio. It's great to have you. Happy Eid, happy Children's Day. We keep talking about financial inclusion and how we'd like to see the rural areas, served better in a country like Nigeria. What are you seeing, so far?
I see a community that is underbanked, right? I see a society that is underbanked, and I think that just like you said, Africa has made meaningful progress in expanding access to financial services over the past decade, and I think there's still more work to be done in including people that are underbanked. I think we've had a lot of amazing infrastructures that have been put in place. Maybe not so consolidated, but if it's properly consolidated, and I think those rural communities that you mentioned can benefit significantly if it's properly consolidated and brought down to that level of access.
Because recently, when I opened one of the banking apps, searching different banks, there's some interesting names you see on the list. There's so many fintech platforms. There's so many. You keep scrolling and you see it, but still, it seems they're not able to plug that gap. Do we need more?
No, we don't. So the idea is not. The idea is not more fintechs, right? It's just collaboration, really. Our existing systems are built in fragmentations, right? So you find that the average individual or business out there needs at least maybe 2 or more apps. Just like you mentioned, maybe 2, 3, 4 more fintechs to do a basic transaction. But with the proper consolidation, proper bridging of these systems that operating on their own, if you bring them together and you provide maybe an all-in-one money and lifestyle solution, I think it will be more accessible to basically everybody, and you necessarily not need to have many more apps. You can operate basically anything you want to do from just one entry point.
Right. And we keep talking about that argument between saying that the fintechs and the traditional banks they're not in sync. They have this opposing way of activity. But do you think the fintechs are kind of making progress where some of the traditional banks
Yes, I see. But I want to correct that impression. So the traditional banks are not against the fintechs. As a matter of fact, I think it's a what's the word? It's a collaboration. So I'll tell you for a fact that even the average
You're not stealing
MFB,
their customers?
they're not stealing their. So I'll give you an example. So even the average MFB or the average fintech is already writing off an existing traditional bank, if you get what I mean. So I think traditional banks have done the heavy lifting by bringing in the core major traditional infrastructures, doing the regulatory follow-ups, with the CBN and all of those good stuff. And for you as a fintech or as an LLB to just leverage the already existing relationship and build faster, smarter financial solutions that your users can benefit from. Now I'll tell you for a fact that those transactions that still go through that fintech or through those MFVs are still being processed by the traditional banks behind the scenes. Yes, at the end of the day, everybody is getting a chunk and a piece of the pie. So it's not a case of they're stealing my customers. It's a case of no, we're working together. So as a fintech, you can work with bank A, bank B, bank C, bank D, integrate them, like I said, consolidate all their internal infrastructures, have zero single point of failure, have multiple options whereby if one fails or one goes down, it automatically switches over to the next. So at the end of the day, we actually need these traditional banks.
Right.
I think
but this collaboration that you've called it now between the traditional banks and fintechs.
Yes.
So you said you refer to it as a pie. Everyone has a piece of pie. Of that pie. So I'm wondering, with both of you, with your collaboration, that means more cost for the customer.
Not necessarily. So it's not more cost for the customers, right? Because the truth of the matter is that it's still the banks, right? With the level of infrastructure that they have, they can give you minimum to little charges, if you get what I mean, as a fintech. So it all boils down to negotiating power. I can tell you for a fact that the same price that your traditional bank is most likely charging you, a fintech can most likely give you a better pricing, because this still boils down to, like I said, you're negotiating theatrics or power between the fintech and their traditional or their settlement bank, and I'll tell you for a fact that in our society today, the average fintech is even more cheaper than the traditional banks. You see transfers free. For instance, on some key fintech apps, you see that Naira transfers are free, to open accounts are free, even some people even offer cards, physical cards free. So some of these things that are items that you most likely never get free with your traditional bank, but because of you're going through a fintech, and of course commercials have been brought down behind the scenes. You as a consumer, you enjoy that benefit at the end of the day.
Right, and definitely we keep talking about regulation. Sometimes some of these fintechs and platforms, digital platforms, they feel they are over-regulated. And you would also say that, the banks, the traditional banks get a lot of regulation. So I would expect that the fintechs should be able to handle regulation. But do you think, looking at regulation in Nigeria, do you think it's stifling some of these fintechs in any way, or
not necessarily? It's a major factor, right? But not necessarily affecting. I think it's more of contributing, if you get what I mean. Regulatory is very, very important. It's just like how they say, where there's no rule, where there's no law, there's no offense, if you get what I mean. Regulations are put in place to guide our activities, guide basically the operations around your establishment, and also to protect your consumers. So regulation in itself is a good thing, and I see it as an enabler, and not really a blocker, right? And in terms of fintech regulations, I think the CBN has been more lenient, and they are now open up to regulating fintechs. You find that as a fintech today, you need basic licenses, like maybe if you are doing payment processing, maybe a PSSP license, a PTSP if you are doing terminals. You can even get an MFB if you are doing digital banking or whatever the case may be. The good thing is you don't even necessarily need to go this route. You can also even partner with already existing license infrastructure. Get a basic SLA in place or an agreement, and you can start doing transactions where the partner in question is the one holding customers' deposits, doing the settlement and all of that good stuff. But all in all, I think as a fintech, if you feel that you can you have what it takes to go through the whole regulatory hurdles, I mean it's all well and good. Right. The average regulation will take you maybe up to nine months to a year to get and all of that good stuff. But I think the CBN has made it very, very easy for fintechs to jump on the regulatory framework that we have today in this space. Yeah.
Right. So looking at you look like a very young man.
Yes, I am.
And you're leading a fintech company.
Yes.
At this point, I'm sure there are some young fellas out there wondering how difficult it is to run a financial technology company? What are you seeing?
I mean, so I wouldn't say it's difficult. I'd say it has its challenges. There are challenges here and there. But you know, one thing about building a fintech is the constant ability to always solve problems regardless of the situation. So for me, I think the most challenging parts are not difficult, would be the hurdles that we face on a day-to-day running operations, if you get what I mean. You know, as a fintech founder, you know, you're juggling concerns around, of course, regulations, you're juggling concerns around partnerships, you're juggling concerns around maybe disputes, you know, and you know, all of those hurdles that comes with, you know, the whole fintech experience. And I'll tell you for a fact that you know, it's not so difficult, you know, if you put your mind to it. The constant, I think one thing that remains constant is, like I said, is the ability to solve problems, you know, as they come. The fact that you know, as the challenges that come in, you're not giving up, you're not stopping, you're going, you're looking for solutions on the fly, you know. There are some challenges that will come in, and you most likely not have direct solutions to them. Then you partner with an existing platform that already has that solution covered, and you can scale that hurdle easily.
Right.
So yes, it's all about just I think it's a mindset thing. Yeah, it's doable. It's a mindset thing. Yeah.
Fantastic. Thank you so much. It was great to
Yeah.
have you, Benjamin, the CEO of Platnova Technologies Limited. Thank you so much for coming
Yeah.
on.
Thank you
today.
for having me. Thank you. Have a good one.
All right, just to get a quick check on what played out in the global economy. Yesterday's close, that's for U.S. markets. We have Maria Bird with a summary now.
The U.S. stock market was mixed on Tuesday after the Memorial Day closure on Monday, as the Dow Jones was down at 0.2%, the S&P 500 was up at 0.7%, and the heavy tech Nasdaq led the day at 1.2% up. This was mostly due to companies like Micron, which are showing strong signs in the AI industry, closing 20% higher. As there's also much hope that there could be a peace deal between the U.S. and Iran and Israel in the near future. Even though the Strait of Hormuz still has some airstrike exchanges between the U.S. and Iran, they were stated just to be in self-defense. As the U.S. president says that he is hopeful that there could be a peace deal in the coming days and weeks ahead.
right, investors looking out for a peace deal finally. Hopefully we get it soon. All right, that's it. That's the show today. Thank you so much for watching Business Morning. Major markets are closed, but we'll give you updates at 1:30. I'm Ladi Williams. We'll be in the team right here at Channels HQ. Bye for now.